If you missed everything that happened during today's session, don't worry. We're about to get you caught up on the only stocks you need to know. Time for the top 10. CBS up nearly 2% after the company authorized a $6 billion share buyback. This will put cash back in shareholders' pockets. A shadow looms, though, as CBS battles with Time Warner Cable. There's an impasse that may disrupt content and channel position. Potentially, Time Warner Cable would take CBS off the air starting Monday, but stay tuned. Everyone's still hoping for some sort of last-minute deal.
I've got a counterintuitive move for you right now. Number 9, Halliburton. The stock is up almost 4%, despite pleading guilty to destroying tests on cement work done on the BP Macondo well that exploded in the Gulf of Mexico. Halliburton is also, among others, facing federal regulators who have begun an antitrust probe into the fracking market.
And at number 8, Penney rising more than 2% after hedge fund manager David Einhorn said in a letter to investors that he closed his short position on the retailer. Other notable short positions closed out were Aruba Network and Dick's Sporting Goods. Adam?
Okay, Zynga plunging 14% after the game maker backed out of previous plans to break into the online gaming market. Zynga also had a little hiccup because in issuing its lower guidance, it said there was a typo. That has since been corrected, but just begs the question, what in the world is happening at Zynga?
Whoops. At number 6 is Expedia. Those shares are plunging. They're down about 27%. That's the biggest drop in 7 years. The online travel site's quarterly results fell short of analyst estimates with increased competition from Orbitz, Priceline, and TripAdvisor. Investors are concerned Expedia is headed for a slump.
Number 5, Activision soaring nearly 15%. Free at last. The video game maker is buying out most of Vivendi's stake, ending 5 years of control by the French media and telecoms company. The transaction leaves Activision an independent company. How about that?
Well, Olivia, I know you're a Call of Duty kind of gal, aren't you?
Exactly. Or you know, World of Warfare, whatnot.
I love it.
I don't even know. I'm not even going to go there.
Speechless, aren't you?
What I find also fascinating here is not just the Activision part of the story, but the fact that Vivendi is now considering breaking up, maybe reforming it around the core sort of media holdings after it was created from all these parts. So we've seen that trend, too, haven't we, of these big sort of conglomerates that are now breaking up into their original pieces.
Yep.
Particularly a lot of big European companies looking perhaps to hive off assets to raise some cash in tough markets.
You got that right. All right, Amazon up nearly 3%, even though the online retail reported a surprise net loss during the second quarter. Hope springs eternal on Wall Street. You should know that. Amazon's been pumping money into warehouses and digital content. CEO Jeff Bezos is betting these short-term investments will eventually lead to, well, if not higher profits, at least profits in general.
The question is, how long are investors going to wait around?
Yep.
At number 3, Facebook, the stock down about 1% after rallying 30% yesterday, sending Mark Zuckerberg's fortune soaring to $3.8 billion. That gain pushed Zuckerberg up 3.8, I should say. That pushed Zuckerberg ahead of Microsoft's CEO Steve Ballmer and Dell chairman Michael Dell on the Bloomberg Billionaires Index.
And number 2, Tesla shares are gaining 4% as Deutsche Bank upgrades the electric car maker from hold to a buy. The firm is optimistic as U.S. orders rise and predicts Tesla can, quote, more than double within 3 to 4 years.
And you can hear the closing bell in the background, which brings us to our number 1 stock, KKR, down more than 1% today. The private equity firm is facing an unforgiving market after second quarter profits dropped 75%, though, again, the stock's only down about 1.3% here on the close. KKR's portfolio holdings gaining less than they did a year earlier and trailing peers like Blackstone and Carlyle Group.